Welcome to the February Spotlight on Investments, brought to you by ProducersWeb.com. I'm Paul Wilson, and in this broadcast we'll cover some of this topic's biggest trends and most insightful research. This Spotlight on Investments is sponsored by Gradient Investments LLC. Finally, experience on your side. For more information, please visit gradientinvestments.com. Treasury Secretary Timothy Geithner recently called for a bipartisan attempt to control soaring budget deficits that he said were largely due to moves made under the former Bush administration. While speaking to the Senate Finance Committee, Geithner said, quote, "On the day that President Obama took office, the budget deficit stood at $1.3 trillion, 9.2% of GDP, and the projected 10-year deficits for the following 10 years were $8 trillion. These huge deficits are the result of the prior administration's decision to enact large tax cuts and a prescription drug bill without paying for them," unquote. He added that moves made under the previous administration's watch were exacerbated by the recent recession. He noted that current deficit trends, which will see the deficit grow to 10.6% of gross domestic product in 2010, cannot be sustained but must be fixed gradually. Finally, he added that the Obama administration hopes to set up a bipartisan fiscal commission to look into various strategies to deal with the current deficits. The U.S. economy was very close to collapsing into another Great Depression, leaving the government no alternative to bailing out financial firms, according to former Treasury Secretary Henry Paulsons. In a recent interview, he said, quote, "There was a time when the credit markets had essentially frozen and when blue-chip industrial companies were having trouble raising money. I knew then we were on the brink. We easily could have had unemployment of 20%. That would have meant millions of additional jobs lost, millions of additional homes lost, trillions more lost in savings. It would have been terrible," unquote. He added that he understands criticisms of bailouts of financial institutions, and said he, quote, "hated the things we had to do, but they were far better than the alternative," unquote. The Securities and Exchange Commission will reassess the 12b-1 fees collected by brokers as compensation for selling and servicing mutual funds, according to SEC Chairman Mary Shapiro. Shapiro recently said that the fee issue is one of the issues that the SEC plans to take action on during 2010. Quote, "The problem is that investors may have no idea these fees are being deducted, what services they are paying for, or who they are ultimately compensating. That's why I believe we need to critically rethink how 12b-1 fees are used, and whether they continue to be appropriate," unquote. She added that while changing the entire system will be a large undertaking, the mutual fund market has changed significantly over the decades, making reassessment necessary. In addition, Shapiro said the SEC will move forward on a point-of-sale disclosure proposal requiring brokers to provide investors with information about securities products and services, their compensation, and other relevant matters before sales have been made. I'm Paul Wilson, and thanks for watching the Spotlight on Investments. To see more video spotlights on your favorite products and practices, find them on ProducersWeb.com and browse by topic.